Hi everyone, hope you're well, hope you can hear me. It all looks fine here technically. I had a bit of a glitch the other night, but everything looks like it's working this morning. Lovely blue skies outside in London town today. Bank of England very much in focus. 15 minutes time, we have an expected 25 basis points cut from the Bank of England. Very, very sluggish, the economy here in the UK. PMIs remain, as I say, very sluggish. The forward-looking outlook isn't great. The construction data that's just come in this morning, I don't know if you can see that on the calendar. Here we got from Global Construction Index of the UK here 48.1, down from 53.5 on a global basis as well. So for the big industrialized economies, construction takes up less than 10% of GDP numbers. So it's not that significant, but the factor is it's gone down and it's missed quite significantly at 48.1, and it's under the key 50 pivot area. Anyway, it's a minor data point. Sterling's been under pressure this morning. If we look at the charts, this is the daily chart for the cable pair. Cable, remember, is the dollar against the US. Sorry, the Great British Pound against the US dollar here on the daily time frame up here. So we'd had a nice rally here from the beginning of January, topped out as we ran toward the 50-day moving average towards the end of January. Then we weakened. We had that hoo-ha on Monday where we were down massively under the key 123. We recovered to close above the 124. So huge candle day on the tariff chatter. Looked like we were going to go long, looked like we were going to break higher. We haven't got back over the 20-day moving average, but obviously the caveat was flat here on the move on the 21 EMA here. Resistance, big fat resistance at the let me just check I can hear you all. Big fat resistance at the 50-day moving average, and we couldn't break higher. We were long, and we've been well, we made some profit initially. This is our target from the other day, and then we went long again last night, and that's reversed as out. We're still actually in that. I don't know if it's taken us out. We'll have a look at the actual pattern, because I've actually put the trades I do on my own personal account on an end of day basis, on not all of them, most of them that I post on our Discord group. I've put them into the into trade panel here, so you can see these here. So I'm not saying copy what I do or anything like that at all. But you know, we've done quite well. We've done very well for January, and we're doing okay for February so far. But the sizes are just for demonstration purposes only. Okay, so as I say, the current three that are still open, we're out the money on those at the moment, and we were in the money on one, I think, pound Aussie, and the cable position stopped itself out. But and more on that later after the actual main news of the day. So yeah, so basically a weakness. So what are we expecting from the Bank of England? Well, Bank of England remains, well, currently, as it sits now this morning, at the highest of the major G10 economies, the major developed industrialized economies. That's the main G7. That's the main ones you hear a lot about, including Spain, Sweden, and Norway's including the G10 at 4.57%. The next highest remains the US at the moment. So 4.75% is the base rate that Bank of England will lend banks in the UK who want to take loans. And that's going to come down to by 25 basis points, or 0.25 of 1%. How you describe that is open to question, but anyway, percentage points or basis points. But the vernacular can be quite touching with some people. But anyway, 4.5% basically. So let's bring it down. Expected to come down another probably 0.75, so another 75 basis points off this by the end of the year. Possibly 3, possibly 4 cuts is what the market is expecting from Andrew Bailey and his crew at the Bank of England. But you know, the outlook in the UK, I mean, growth has been moribund really since the summer, and you know, the new obviously Labour government's come in. It's raised taxes on businesses. It's done a lot of deals, ended lots of strikes, and done and then planning to invest heavily in public services. No personal taxation's gone up, but businesses are going to get taxed from the additional national insurance contribution from the beginning of the new financial year, which is coming round in April. So that is to look forward to as a businessman, or not look forward to as a businessman. So that's having some sort of pinch on economic outlook and employment prospects. Last time, the other key thing that caught the market out last time was this split in the vote. It was expected to be an 8-to-1 vote about cutting rates. No change. Sorry, there was no change last time. Sorry. But the surprise was 3 members of the MPC, the Monetary Policy Committee, looked to cut rates. So it's seen as dovish, and we got this weakness in sterling from it. It's supposed to be it's looking like an 8-to-1 split this time. But I say we'll see actually what happens at less than 5 minutes now. Minutes, and it's really the outlook is what markets are expecting. Are looking to predict or look where they're going to place their next positions with regard to sterling. But as we see, if we look, just quickly go back to the cable trade here, there's clearly technical as well as obviously fundamental issues holding the cable trade, the sterling against dollar, under the 50-day moving average. So big resistance, hugely psychological 125 level. It can't break over there. It had a 3-day rally. It's petering out today. Are we going to hold the 20-day moving average on what the Bank of England may, on my notes, say as far as the outlook? Are we going to get another surprise from the voting? Are we going to get some sort of disparity in the comments from members of the MPC? We'll see how all that pans out in the next 15 minutes or so. So let's just bring this down to the 5-minute time frame. So dollars relative and so just quickly, yesterday we had a bounce in the stock market. We'll come back to these later after the Bank of England's come out. So yesterday we had a bounce back in the stock market. We just have a quick look at the S&P. Sorry, it's on a 5-minute time frame. So a strong bounce back in the stock markets yesterday from recovering Monday's shakeout. Oil continued to unweaken. Oil continues trails to the downside. So the Monday test of under $71 is still in line. So we continue to move down. And conversely, the mighty gold, the mighty yellow stuff continue to move higher. Yesterday producing another new all-time high at 28.82, and we're sort of plateauing today, but we are still high. So trail that stop loss up. Don't bet against the mighty gold currently in the current market. So let's just quick flick back to cable. We'll have a look at some of the other crosses as well. Obviously, it's the daily. So let's just go back to our 5-minute time frame. See what's filling on. I'll leave this white background on for this, unless somebody wants to look at a different setup. I'm going to go through all the 5 different layouts I have here and show you how each of those, whatever strategy, whatever approach you're taking, when you have a strong move, it's self-supporting. So it's not really about the strategy, guys. It's all about how you interpret. It's all about your emotional control and your psychological approach to trading. That's what makes the difference between successful traders and losing traders. Losing traders, if we just look at this example for now, we'll be focusing on this profit and loss column. It's red, and it just can't let it go. Imagine if this was a full lot size, and these numbers would be much 100 times bigger. So that's the sort of thing that you've got to try and deal with and understand what when it comes to trading. It's that if you're going to focus on this profit and loss column, I would suggest go and do something else. because you might not be cut out to be a trader. You've got to take the losing with the winning. It's all about accepting your losses and just seeing it's part of the game. It's inevitable. You know, we took 5 new trades yesterday. We were quite exposed, as I said in the note. You know, it was a bit silly doing it with a full position. If you'd been a full position, given that the volatility of the sterling was could be quite significant. But as we can see, yesterday there's the buy. We were stopped out. And there's the sell for the pound Aussie. So my system, you know, we had a sell on the Aussie pound, but we had a buy on pound dollar. 1-1-1 lost. Obviously, the winnings wasn't as big as the losings. That's the nature of the way my system works. It's quite short term. So, but that's the nature of what happens. And if you're going to get really uptight about these, you know, all these red numbers here on your account, then, as I say, perhaps trading isn't for you. Okay. Or the other thing, if you're focusing too much on the green, you know, the big winners, and you think, oh, this is easy, I can do this. You know, you've got to keep a balance. Got to keep a balance. So anyway, enough of that. We'll come back to that after the data's come up. So clearly here, as a short-term trader today, we've been short, or you would have been short, pound cable, just been trailing down. That was our stop loss. Obviously, out we were the other way around. Looked like to be going long, then petered out again, so it's short again now. It's dropping around, so you know, wait for the data. I mean, if you're real risk averse, you know, this is here as a 5-minute trade. Obviously, the announcement is going to really move this, but here, you know, as a 5-minute trader, sorry, on a 5-minute trend line, we got support there. And on the short-term basis, we've got RSI. Just looking at the indicators are actually on this chart. We've been oversold here, so that might have been a suggestion to get in. You probably got in there. This strategy would have triggered long here at 11:15, but then it's come back down. Trying to go immediately gone short here, but it's chopping around. So again, reason not to be trading around the news announcements. If we just put the if I just add the VWAP to this one, because it's you know, it's a intraday traders favorite. You can see this is the VWAP here, the blue line up here. I don't want to be talking when the data comes out, but you know, the trend has been very much to the downside, and so the volume is to the volume weighted average price is all the way up here at 24.69. So there we go. We are still ticking down. So the data's numbers, data news is out, and the immediate test is to the downside. Whether this actually follows through or not, we shall see. But there we go. Cable losing ground. 23.86 we've gone to. 23.86 we've gone to. We've gone under 124. Will there be any buyers around there? So let me just check my news feed, which is over here. My terminal's stalled. That's not great. Let me just have a look at the short internet. So nothing. Right. So the announcement's out. Let me just. Right. Okay. So the 8-to-1 expected rate vote has actually gone 9-0. So there's no dissenters. 4.75%. We've come down to 4.5%. Everyone's in agreement. The statement is yet to. Statements here. I'm just trying to just read it. Yeah, on the balance of data, yeah, nothing new there. We are expecting today's sluggishness. Yeah, he's talked about the weakness of the UK economy, jobs starting to slow. Gradual, careful approach. He liked this again. Bank speak. Continue to monitor closely. Monetary policy will need to continue to remain restrictive for sufficiently long. I think that's the phrase. Restrictive for sufficiently long. It's saying here. So this is denting that rally we'd seen in sterling. So sterling falling on that comment, I would guess. We'll decide the appropriate degree of monetary policy restrictiveness at each meeting. Gradual and careful approach to the further withdrawal of monetary policy restraint is appropriate. Okay, so they've gone, excuse me, they've gone with the 25 basis point cuts, but it's I deem a hawkish outlook, that particular, a dovish outlook, that as they've moved to talk about restrictive policies still being in place. We continue to monitor closely the risk of inflation persistence. Remember, inflation, particularly in the UK, has sort of bottomed out, got to that key 2% that previous Prime Minister Rishi Sunak was so focused on, but it started to tick up before the election, and it's continued to edge a bit higher. So a big move down, a big move against sterling here. If we look at the other crosses, the major, so we look at the pound. Not against the pound, against, where's the Swissy, the yen? Dear me. Completely lost it. Trying to do it. There we are, euro pound. That's back. I mean, it's been very, very weak. If we look at the euro pound on a daily basis, I mean, it's all the way down here, but this is a big recovery on the Bank of England. So the gap from Monday has been filled today. We'll talk about the gaps later when we look at some of the indices. So there's been an immediate move down, and also in yields, as you might expect in London. The 2 years at 4.38.5. It's yeah, 4.37, yeah, down this morning. 83.70 here for euro pound. Yen was the other one. Yen's been particularly strong over the last couple of days, and again, you see here 5-minute chart on the move is consistent across the sterling pair. So sterling's weakened significantly on that data. I mean, literally only 4 minutes into the announcement, but the key thing I think that's drawn attention for markets and investors against sterling is the comments. Let me just reread it again, a bit more slowly this time, hopefully. I think the key thing was this statement here: a gradual and careful approach to the further withdrawal of monetary policy is appropriate. Monetary policy will need to continue to remain restrictive for sufficiently long. I think that's the other key thing as well. And talking about, we need to watch inflation and inflationary pressures remain there. GDP growth is expected to pick up from the middle of the year. It's been absolutely, as I say, glacial since the summer. It may pick up. The data PMIs this week haven't been supporting that idea from Mr. Bailey, but we'll see what he says later on. He's got press conferences and plenty of speeches coming up, but certainly sterling is down. We will decide the appropriate degree of monetary policy restrictions at each meeting. So whether we may see that, as I say, it was expected before this announcement, 3 or 4 rate cuts from the Bank of England. First one today. Remember, they've only cut, I think, 2 or 3 times since the COVID crisis. This is the third time, only the third time since the end of the COVID crisis. The Bank of England have been lagging. I mean, it's a really nice picture this morning on one of the Reuters articles. If I here, this one here, I hope you can see that. So here, as I said before, the UK Bank of England were the highest, the main G10 countries, the major industrialized countries, at 4.75%. We're now back, or it's now back into the range of looking to move again as well. So and they've moved the least. This is what this is showing where we were previously. Big moves from the Canadians, big moves from the Swiss and the Swedes, and UK remained at the high end, and still at the high end, even at 4.5%. So things very sluggish in the UK. The data is not helping for that, and many are arguing the Chancellor's budget could have a significant impact on jobs as well. But it means that potentially she is going to follow through with some of these big government investments, government expenditure. So that might tweak from the other side. So we'll see. But as far as the immediate reaction to the markets, it's a weaker sterling here with pound yen to the downside. I don't know what's happened with our open positions. The only positions we got open are still the dollar ones from last night: dollar Swiss, dollar Kiwi, and dollar Aussie dollar. Sorry. Kiwi and the Swiss franc, they're all out the money. Currently, we'll have a look at the actual details on the charts in a minute. So, any resistance? Actually, let's just go back to cable. See where we are in the bigger picture. So that's our 5-minute chart, which is, it's been short all day anyway. So thanks very much for going down. So where's the next resistance? Well, let's have a look where we are as we go up the time frame. So 10 minutes is also a big weak one. Let's jump to 30 minutes down all day. Some areas now. Where's our area? Well, obviously the first pivot area was the big round 124. That's been breached so far. Has it been breached a lot? Yes, it has in the short term. 123.20. That's 20 pips below the key 124. So that is significant. Interestingly, if we look to the left again, always look to the left, my friends. This was on the 4th, early in Asian trades. We've breached that low. So where do we look? Where we look further left, and that was a recovering area here from Monday's hiatus in the Asian session. So are we going to test that? Well, it's still a leg to, it's still quite a move down, isn't it? So let's go to the hourly chart, see if it gives us any more pivot areas. Well, it doesn't, does it? There's the gap from on Sunday's open as we went all the way down to 123. It stretched to 123 on that. An announcement, it looked a bit overdone, personally, I would argue. So if you're wanting to buy this, because that's what a lot of people, again, that's what a lot of traders do. They think, oh, it's moved really aggressively, it's got to bounce back. It doesn't have to bounce back at all. Sometimes the trend can be incredibly strong. I mean, again, this is the hourly chart. Look at this RSI. It's gone from overbought here, more or less this time yesterday, at 77.43, all the way up here. It breached back out of the overbought area. So if you've been trading that on the RS, using the RSI as a key entry point, you're laughing all the way to the bank. But now at 18, way overbought as far as the technicality is concerned. But as we say all the time, things can remain overbought for a lot longer than you can remain liquid in the markets. But anyway, so yeah, the move down. So the point is, where's the next pivot area? Well, really, it's this area here, just below the 124. You can see on this hourly chart, because this was the normal service, if you like, into close on Friday. This was the hiatus from the Trumpism. That was then recovered. Then we went another leg higher, back to 125. But we've come back. So 124, I would argue, still remains the key pivot area here on this end of our time frame. So we'll see where that goes once that hourly candle's completed. So if we go up the time frames again, the 4-hour trader is here. Well, he was long from this morning. He was short from this morning here on this strategy, and he's just put his trade on at 124.25 this morning, and down it goes. He might be looking. Well, yeah. Well, see if it retraces. Probably stop losses probably around about the 125 area, maybe just above that, above the second candle. If he's gotten on this candle, he would have had his stop loss around about there, 125.08, I would say. Even though the turn was sort of a bit higher, but see how that's going to run. But that's looking quite weak. The volatility, Trump-induced or otherwise. You don't mind or you don't care if you're just following a strategy. Obviously, sometimes it can get thrown out of kilter, but the 4-hour trade has certainly been short, and nothing that's come out of the Bank of England would have changed that position. So he may be looking to pull his stop loss down later on in the day. RSI still continuing to decline, and all the way up at the daily time frame, which is where we started, wasn't it? go to the daily time frame. We've had 3 strong days after the volatility of Monday, but we've certainly banged into the 50 days we said earlier and come back down. So the down day ahead of the Bank of England is still moving down. So again, on an end of day basis, if this closes here below that 20-day moving average, we have got a cross of the moving averages in there. Sorry. Zoom out. I'll make that bigger. You can't see that because I'm moving it. They're all combined by the red candle. That would be short at end of tonight. Is that what that's telling me? Because it's rejected the 50. Intraday it was over the 50, and it's a significant down candle so far, but it's not completed, so I'm not going to make a decision on that particular candle. There's some outlooks that have been put in here as well. I'm just looking at, they've updated some data here. So GDP estimated to have fallen by 0.1% in the fourth quarter of 2024. Previously, it was flat, so that's negative. Estimated to rise by 0.1% in the first quarter of 2025. Yippee! Seen at 3% in the first quarter of 2026. Previously, it was 2. So again, they're upgrading their outlook, but we'll see what actually obviously comes. It's a long way away. 2027 is 2.3% from 2.2%, and 1.9% for 2028 from 1.8%. Yeah, amid the mix. So yeah, softer growth, very limited outlook, sort of silver linings in that growth, the gradual and careful words of the key thing. And I say the thing that hit me in the phrases was that gradual and careful approach to further withdrawal. And what was the other one? It was, I've lost it now in this statement. Remain restrictive for sufficiently long. That's one that monetary policy will need to continue to remain restrictive for sufficiently long. So weaker sterling, as you might expect. The upside might be one would expect a rise for stock markets. So unless there's anybody else wants any more chatter about sterling, we'll move on to other markets at the moment, but let's start with the stock markets, because yesterday we had quite a significant bounce, and so let's just start with the FTSE 100. So 8,750 new all-time highs today. This is let's just get rid of that for now. Let's get rid of that for now. Leave that on because I'm going to come to that in a minute. So there's obviously we were long this, weren't we? We got stopped out, but nice. I said we took that big chunk of that move up, consolidate, and then we went through 8,600, gapped on Monday, lower, back through it, but a big recovery yesterday. So I was going to show you big positive candle again yesterday, and then today we've gone through 8,700 for the first time ever. And stock markets, if we take the weekly, approaching all-time highs here. You see is going back to a long way back here for the FTSE. This is pre-pandemic areas. We couldn't get over 8,400. This is the obviously massive impact of the pandemic, the second quarter of 2020, and it's recovered since. I mean, it's been languid recovery compared to the US markets, the FTSE, but even so, it's been a great end of 2024 and beginning of 2025 for the UK FTSE 100. Big positive weeks so far. So all-time highs, and the weaker sterling is obviously lifting that. The main reason, remember, about 70-odd%, I think it's like something like 76% of the UK 100, the UK's biggest 100 companies, 76% of them earn most of their earnings abroad, a lot of them principally in dollars. So a weaker cable rate improves the outlook and the earnings of these companies, and when they report, and earnings season, we're very much in full flow at the moment. So just back, let me just finish in Europe as well. DAX is also trading at all-time highs, 21,800. That's the weekly. Let's just go back to the show the daily. Similar recovery. Shock on Monday, recovery to close positively, and then followed through Wednesday. Not as big as the FTSE one, as you say, but today we're pushing to the, we're testing all-time highs again, 21,800 on the DAX as well. I love the DAX on an intraday basis, much more interesting to trade than the FTSE. So anyway, that's where we are. In Europe, the market's live. Obviously, we're yet to open. In the US, we're still a couple of hours away. We've got plenty of data out of the US as well this afternoon, but strong day yesterday. The cash S&P 500 closed at 6,060, 6,061 yesterday. We're currently trading around about 6,065, so just 5 point, very flat so far for the day at the moment here. And so again, chopping around at highs, but again, big recovery on Monday from the shock on the open and followed through yesterday. Strong day Wednesday. Nasdaq, strong day yesterday as well. From Friday, Monday's shock, much more volatility on Nasdaq. We've had weaker or disappointing, not weak is a bit kind, weak earnings or weak expectations. Disappointing, I think is probably the best word to say, with regard to big cloud players. So Microsoft and Google. Google was down 8.8% at one point yesterday. It's closed down 7%. And tonight we have Amazon after market closes. We've got Amazon reporting. Perhaps they've been sort of hammered a bit worse than some of the others, Amazon, and the expectation that they will suffer more, given that so much of their product is sourced and comes from China. If the tariffs do full-blown trade war between the two biggest economies in the world. But again, a lot of it is still chatter, a lot of it's bluster, a lot of it's positioning. But they are determined to go after or be seen to be going after Chinese trade imbalance with the US. So he's certainly not going to back down from that. So, excuse me, we'll see where we go. And as I say, as we did the other day, that's a key trend line I'd like to see broken before this starts to look a bit more spicy to the upside. The Nasdaq 100 flat for the RSI. So the Nasdaq 100 is the weakest, I would argue, of the three majors. If we look at the US 30, the industrial company is doing much better, testing all-time highs, new all-time highs here intraday. You see here for the Dow, push back much more aggressively. No gap on that one. 20-day, there's the 50-day down there. If we go back to the Nasdaq, you see the 50 days here tested, we breached it, so much more vulnerable. So the positivity is that the earnings season and the expectation is the broadening recovery, so it's more position. See here that the S&P more like the Nasdaq than the Dow. So, but we are pushing higher, but all-time highs are much further away for the S&P as well. So the Dow's outperforming the other two currently, and it's looking relatively strong as well. As we said earlier, gold continues to move at all-time highs. That was yesterday's 82, 80, 28, 82. We're at 28.65 at the moment. So again, another one that remains quite robust. Now then, what I was wanting to do was show you, when we have a strong trending mark, it's easy to say, oh, look what happened. But I just wanted to go through all the different layouts, the 5 different layouts I've got here. And all of these would have kept you the right side of this particular trend. So it's not about the strategy or the indicators or the lack of indicators that you have on your trading platform or your trading account. It's how you, when you decide to take the trade, can you follow the rules? Can you accept getting out when you're losing? Can you accept your stop loss? Can you trade with a stop loss? Too many traders trade without a stop loss. They have no idea how much money they're going to lose if it goes wrong. They're only focusing on winning. And that's because, too much time is spent looking at this thing, looking at this profit and loss column all the time and getting too uptight about it when it's red and getting too excited about it when it's green. It's just part and parcel of trading business. And that's why it's always about mindset. Successful traders have a great mindset. They accept losers. They bag the winners. They live to fight another day. And that needs to be our number one mantra. And on that, just on that, I'll come back to this in a minute. Really, that's one of the big things about prop firms in general, but us in particular, the proptrade.com. Our evaluations are phases. They're very fairly set out. It's very clear what you've got to achieve, and what you can't achieve. Where the losses need to be, where your positions need to be. What your profit is, drawdown, when you can trade, when you can't trade, what the leverage is. It's all very clear and transparent and open. There's no, secret rules and conditions in here. I mean, these are all, I've read these more than once, and they're all very straightforward. There was a guy contacting me this morning saying, thanks for the trades you've been putting up on Discord. I've managed to get funded, and he's, happy with his few $100s. I mean, and that's the start, from small acorns. Big trading accounts can be created. It's all about following your process and something that works for you and works with your lifestyle and works with your time frame and works with your account. So again, I can't tell you what to do, but I would suggest having a decent size account, say 25, 50,000 if you can afford it. We do still have some discount coupons running. I think thank you 15 is still running. I know the marketing guys gave him, I think it was DC 15 was working as well yesterday. So the beauty of these bigger numbers, investing a few $100s, guys, is that you get more margin, so you can take some of these less popular trades. The trigger. Most markets trend or consolidate. All markets trend and consolidate. So there's opportunities all across the board. You don't have to focus just on the big currencies or just on some assets. Obviously, if it works for you that you're only trading 3 or 4 assets, all well and good. I've found my mantra in about 50 assets. I scan them each night, and then it gives me either some nights there's lots, some nights there's nothing, some nights there's too many. But you take them all because that's how systems work, and you manage your risk accordingly. You dilute your risk across all the open positions. But more on that on another day, because I've been rattling on for 45 minutes now. It's probably a bit too long again, but do come and join us, guys. We're here to help you, and we'd love to have you on board. And anything we can do for you to be successful means that we're successful. And more successful traders we are, more funded traders we are, more popular we become, I would guess. But we are doing things properly. Okay, so take care, everyone, and we'll see you all tomorrow. Actually, today's still got. Where's my calendar gone? Lost my calendar. We still obviously got. Let's go back. We still got claims out of the US later on today. Let's have a look at that. There we are. I need to open. Lost my calendar there, didn't I? Claims from the US this afternoon. Weekly claims. It's the. Where are we? Oh, it's got everything on again, hasn't it? Thursday. So initial claims, that big blockbuster number last week, 207,000. Expect to tick up a bit this week, but anything under 250,000 is a very, very strong US jobs market. I deliberately said very, very that way before as well. Challenger job cuts actually coming up ahead of that, so see if there's any. It's been suggesting potential weakness in some parts of the jobs market, but and there are certain signs, as we saw earlier in the month, about certain sectors. But yesterday's ADP was very, very positive, and we'll see what non-farm payroll looks like tomorrow when I'm with you. So anyway, I'll leave you for the rest of the day. Take care, everyone, and let's see how we get on and see if sterling's actually made any sort of recovery in our little 5-minute position charts we were looking at? Not really, has it? So it's gone down, tried to recover, and it's gone down again. So the trend is to the downside. So if you're trying to buy this at this 123.80 level, be very careful, is what I'm saying. That looks like a weaker sterling potentially, unless Mr. Bailey has something to say that surprises anybody later on. I very much doubt that. So he's got a speech in an hour and a half. So there's no actual press conference, unless that is the press conference. It's quite late for the press conference if it is. I think there was one today. But yeah, and he's also scheduled to speak later on today as well. So 2 speeches from Andrew Bailey, the head of the Bank of England, later on today. So sterling remains under pressure from the 25 basis point cut and the universal 9-0 vote by the MPC members. No dissenters. Everybody wanted a cut. 3 wanted a cut last time, remember, and that surprised things. So dovishness, and the outlook was very poor, wasn't it, going forward for the UK economy. So see how the politics resounds like that in the UK as well. So sterling weaker, gold at all-time highs. Billy Bitcoin we haven't actually had a look at, have we, today? So look, 98,600. Trends to get excited about. Oh, there we are, positive from this morning over the 21 here. So we've been long here from 4 o'clock. Added to that at 6 o'clock, and still pushing higher. 100,000, still a leg away at the moment, but positive for Bitcoin this morning. So there we go. Take care. See you all tomorrow for non-farm payroll, and see what the US jobs market's